In the race to power the future, one overlooked uranium stock could be the next breakout: energy fuels. While headlines chase big tech and oil giants, a quiet revolution is brewing in nuclear energy. Uranium is back in focus, and with global demand on the rise, one US-based company is positioning itself at the center of this resurgence. Energy Fuels isn't just riding the uranium wave, it's building a strategic moat with rare earth elements and vanadium production. And yet, it remains largely under the radar. So, is this just another small-cap energy play? Or could it be one of the smartest early-stage bets in the clean energy race? If you're looking for smart, data-backed investing opportunities in the energy sector, hit that subscribe button, give this video a like, and let's dive in. Nuclear power is enjoying a revival, and uranium is once again in the spotlight. As nations double down on clean energy commitments, nuclear is being embraced as a low-carbon, reliable alternative to fossil fuels. The emergence of small modular reactors, or SMRs, has further fueled this momentum. These compact, scalable units offer a promising way to deploy nuclear energy faster and more affordably, potentially driving uranium demand to new heights. Another key driver is energy security. The United States, once a dominant uranium supplier, now imports the bulk of its supply from Canada, Australia, and Russia. In response, the US is moving to rebuild its domestic supply chain, positioning domestic producers like Energy Fuels for strategic relevance. Energy Fuels, headquartered in Denver and listed on the NYSE, has carved out a distinct niche in the energy sector. It's the leading uranium producer in the United States, but its ambitions stretch far beyond that. With operations spanning conventional and in-situ uranium mines across Wyoming and Texas, and a resource base exceeding 81 million pounds of uranium, Energy Fuels has a significant footprint. Its vertical integration, spanning mining, refining, and rare earth processing, gives it a unique competitive edge in an industry dominated by single commodity players. What separates Energy Fuels from its peers is its integrated, US-centric strategy. In a world where supply chains are vulnerable and governments are prioritizing domestic production, Energy Fuels has the infrastructure and expertise to deliver. The transformation of the White Mesa Mill into a rare earth hub marks a major milestone. In mid-2024, the facility successfully produced commercial-grade NdPr oxide, a key component in EV motors and wind turbines. This makes Energy Fuels the only US company capable of processing rare earths at commercial scale. Add in vanadium, where it leads domestic production, and you get a diversified portfolio of critical materials flowing through a single processing plant. This integration lowers costs, streamlines logistics, and reduces dependency on foreign markets. In short, no other US energy materials company offers the same end-to-end production across uranium, rare earths, and vanadium. It's a model built for a more self-reliant and energy-conscious future. Despite these strategic advantages, Energy Fuels remains undervalued. While global giants like Cameco trade at price-to-net asset value ratios between 0.7 and 0.8, and development stage players like NextGen Energy command even higher multiples, Energy Fuels hovers near 1.1, despite having operational assets and revenue. The company also holds over $1 billion in inventory value across uranium, rare earth oxides, and vanadium. That figure doesn't even include the strategic value of its infrastructure, particularly the White Mesa Mill. Wall Street is beginning to catch on. Analyst price targets for UUUU range between $8.50 and $8.73, a projected upside of 50 to 60% from current levels. Ratings from firms like Zacks and Public.com consistently list it as a strong buy, citing its diversified business model and rare earth capabilities. Retail investors are also taking notice. On forums like Reddit, some users highlight that Energy Fuels is already producing 1.5 million pounds of uranium annually, even as it ramps up rare earth operations. Yet, the stock trades like a company with a single revenue stream. That disconnect could present a compelling opportunity. Energy Fuels stands at the intersection of several powerful catalysts. First, it's directly tied to the US government's effort to secure a domestic uranium reserve. The National Nuclear Security Administration awarded the company an $18.5 million contract, and deliveries of 200,000 to 300,000 pounds are scheduled for 2025. That's a clear signal of confidence and demand from Washington. Second, its rare earth capabilities are gaining strategic traction. Energy Fuels has partnered with Chemours and POSCO to build U.S.-based rare earth supply chains, aiming to break China's near monopoly. White Mesa is already producing NPAR oxide and expanding capacity to meet rising industrial demand. Meanwhile, uranium prices are supported by political tailwinds. New executive orders and bipartisan initiatives are boosting nuclear development and limiting Russian imports. Energy Fuels, already positioned to deliver, could benefit directly from these shifts. Together, these factors form a bullish trifecta: strong federal support, commercial-scale rare earth output, and pricing momentum in uranium markets. Of course, no investment is without risks. Energy Fuels still faces regulatory complexity. Projects like Roca Honda and Nichols Ranch require extensive permitting, and delays here could hinder growth. Commodity volatility is another concern. While long-term demand for uranium and rare earths is strong, prices remain subject to macroeconomic forces and geopolitical developments, particularly those involving China. Additionally, the company's financials bear watching. Despite having over $215 million in working capital and no debt, Energy Fuels reported a net loss of $26 million in the first quarter 2025. As it scales production, future funding needs or potential dilution may weigh on investor sentiment. Despite these challenges, Energy Fuels offers a compelling growth narrative. It's not just a uranium miner, it's a fully integrated critical materials supplier with a rare asset base and early mover advantage. Its ability to process uranium, rare earth domestically at scale is unmatched. Compared to peers like Lynas or MP Materials, Energy Fuels is equally strategic, but arguably more undervalued. It has the assets, the partnerships, and the policy tailwinds to drive exponential growth. With a stock trading below asset value and a pipeline that touches everything from EVs to national security, Energy Fuels might just be the most overlooked clean energy multi-bagger in the market today. Energy Fuels isn't just riding the uranium trend, it's redefining how America sources and processes the critical materials of the future. With its unique vertical integration, domestic infrastructure, and expanding role in rare earths and vanadium, it has the potential to lead the next wave of the energy revolution. So what do you think? Is Energy Fuels the underdog ready to roar? Drop your thoughts below. Does UUU belong in your portfolio? Are you bullish on America's energy independence play? Thanks for watching Stocks Telegraph, where we find what others miss. Don't forget to like, subscribe, and share your take in the comments. Stay tuned for our next deep dive on top small-cap energy plays and overlooked mineral stocks. We'll see you in the next one.